All right, so let's get into the high probability price setup, and just referring to manipulation, the manipulation aspect of it, and kind of breaking down what that looks like. So in terms of the actual setup of what manipulation means, if you take a look at the chart, you see the highs. This line it pretty much lets you know exactly what a high is for the entire chart. So it signifies that through the entire time frame, right? So these are the most significant high points. If you take a look at what took place, you'll see that this high was breached, and then it came right back. Price came right back down into that zone. And that in itself, that is what's considered manipulation. It's price running up, tricking individuals that it might keep running up, and also taking out the stop losses from those who had a sell coming down, and using that liquidity in order to run price the direction it needs to go. So as the manipulation took place, price started reversing and it went the opposite direction. And now that's one aspect of the high probability price setup and the high probability price formula, or the formula. We don't take trades unless we see this manipulation happen. If you just focus on not taking trades unless you see this manipulation and it's clear to you, if it's not clear to you and it is still manipulation, it's better not to take the trade. We want to make sure that it's clear to you. It needs to be so clear where it's undeniable. That is manipulation. So if you just focus on back testing and seeing this, and continue to just focus on seeing this, and only take manipulation trades that are 100% clear to you, your win rate will skyrocket, right? So let's take a look at the next chart, right? So now we have the high probability setup with market structure shift. So now remember, the high probability trade formula, the high probability formula is the high probability time multiplied by high probability price, plus high probability price, which is pretty much market structure shift. It's pretty much the market structure manipulation and market structure shift. So if you take a look at this chart, you start seeing how everything comes together. You see the high was breached, the manipulation is right there. And then if you take a look here, you see this is the first market structure shift. This high failed to take out the previous high and it just rejected, which pretty much shows a shift in market, a shift in the actual price direction, and it started coming down. Now this right here is a second market structure shift. If you haven't taken the trade here, if you haven't taken it in the manipulation zone or the first market structure shift, you can take it at the second one for it as it runs down. And this right here is the formula that is needed. You would get in here and run the trade all the way down, and that in itself will become a high probability trade. And right there, you're good. So this is both combined together to bring about the high probability trade. Now this is considered a bearish push. But let's take a look at the overall chart. The slide just went on, but let's take a look at the overall chart, right? Overall setup. So now, if you take a look at the overall setup, like I was saying, that was a bearish push down. But if you take a look at the chart in itself, now things start becoming clear, because you start seeing you see the manipulation here. This was a low that was created. Price manipulated that low, went up. It took out this high and it failed to break the previous low, so this became market structure shift, and you could take that buy going up, right? So now this, what I highlighted here, is the manipulation on a lower time frame. See how this high was breached, and this is a retracement play. It was breached, and if you zoom in to this, you could pretty much start seeing what this looks like in relative to the higher time frame. I should drop a screenshot on that about so you can see what that looked like. But yeah, so if you take a look, now everything's pretty much clear to you and it's not confusing. If you just follow the manipulation plus the market structure shift, you'll be able to catch the plays up and down, up and down, up and down with no problem. The problem is a lot of individuals don't know how to sit back and wait for this. As you see the manipulation happen, clear as day, and then you see this failed to break the low, so that's the market structure shift, and it ran up. And this right here confirmed that as well. It failed to break that low and it ran up again. And even if we take a look at this on a lower time frame, this will end up being a high probability trade as well. So that's how high probability setups pretty much look. I will continue to drop a few examples so you're 100% familiar with what you're seeing. So let's take a look at something real quick. I don't want to confuse anyone. I want to go at a nice pace. Rewatch this video. Keep rewatching this video. Keep watching these videos for you to understand what is going on here, right? Let me see if I could zoom in a little bit. Just one moment. Hold on. I want to grab everything that's needed. Alright, so I grabbed everything that's needed. So if you take a look at the actual chart, this was exactly what I was talking about. So this was the high. It was manipulated. Market structure shifted. And that pretty much gave the signal that it's going to push down. Same thing that happened here. This was a low. That was a low. Market structure pretty much manipulated. Market structure shifted. And it took off. It went up. So if we want to look at it in the context of a lower time frame, if we go down to the 5-minute, I'm gonna make sure you guys understand this because I want you guys to see it the way I see it. Alright, if you go to the 5-minute, right, and we dissect this, this was a previous high, market structure, this was a manipulation, and even if we go down to the 1-minute, we'll start seeing that this is manipulation within manipulation, right? This is how you catch clean entries. So if you take a look at this play right here, this high right there was manipulated. These highs were manipulated with this wick. It came down, and then this is a shift of structure right here and run up. So now this is what it looks like to get a clean entry for the higher time frame play, because getting it on a smaller time frame and using the same mindset when it comes to high probability trades, market structure shift, manipulation, and all that stuff will allow you to get a nice clean setup, a nice clean entry for it to run down. I'm gonna tell you this. All you need to know, all you need to know for good entries is manipulation, market structure shift on a low time frame relative to the high time frame move. So we saw what it looked like on the 15-minute time frame, but this is what it looks like on the 5-minute time frame, right? And we still look for the same thing: manipulation, market structure shift. That's it. So we don't need to complicate it. So this was the actual shift of structure based on the 15-minute time frame, and then it ran down. And if you take a look, what I said going down to a lower time frame, how I was saying that this right here would be a retracement play. If you take a look at it, it did the same exact thing, right? This high was created, was manipulated, came back into, market structure shifted, and it ran down. This is a retracement play. And then it continued going this direction after it hit the order block on the bottom, and it continued running up as it fell the higher time frame previous low. You see how that plays out? It's the same thing over and over and over and over and over throughout the entire chart. I don't know if this can go down to 1 minute time frame, because this is not the premium trading view. It's not my premium one. So it might not let me go back that far. I hope it does though. Okay, this is what I want y'all to see too. So, like I said, it's not the premium account. I'm just using the basic account to do all this. So now, this is how you catch clean entries using the same concepts. See? High, manipulation, market structure shift. So now, seeing this, if understanding the high on the higher time frame, and then seeing the breach of the high on the higher time frame, you just look for the same thing again. You look for another breach on the lower time frame for you to actually enter. So now, if I were to enter here, let me change the color so we can see it better on the. Let me do like one of those, and I want to make it a little thicker so we can see. So if the entry is here, let's say if the entry is here, because this is the actual market structure shift. So now what do we have? We have the manipulation and we have the market structure shift for you to enter, right? And if we go down, if we go back up to the 15-minute time frame, this is what will give you a clean entry. And notice the entry will be right there with a 5 pip risk, and pretty much even if you tackle the low at the bottom here, it's a 30 pip gain. So if we look at the risk to reward on that, I like to show a lot of examples. Put it like right there. You have a 1-to-7 risk reward ratio, and that's some people can't even get a 1-to-1 or 1-to-2, right? So, and that's just one play. So even down here, I'm going to show you, it shows the same exact thing, and you can take advantage of every move the same exact way. Right? Same exact way. This one isn't as pretty, but it's still nonetheless the same concept. The previous low was down here, and this will be considered a manipulation zone, and this will be considered market structure shift, and you will enter right there. And let's go back to the 15. Let me stretch this out. Your entry would have been right here. Target the previous high. Put this right there. Almost a 5 pip again. Another 1 to 7. So that's pretty much the power of this. But we're not going to get into entries now, but that's going to be probably part 3 of the course. This is just part 1, just getting you familiar with what this all means. This is just part 1. Part 2 is going to drop. I'm going to get into fundamentals and stuff, and then part 3. So this is relative to time and price, right? Which I'm gonna drop some videos on the actual price, the actual time and price, and you can see how everything correlates when both are put together. Now this is a 15-minute time frame, and this breach was London session breach, or Asian session breach during New York. This was a London session breach up here. And like I said, Asian session is just used to understand the highs and lows. And these breaches usually happen on London session or New York session, because that's when we have everyone's hands in the market, and then we get the market structure shifts for the moves. So that's about it for this video. I hope you got some insight. Let's continue. Let's move on. Let's move on to the next module.